Michal, once again to cover the case study presentation on can insurance be profitable in the world of Big Brother? So,
Okay.
you have the clicker, yeah. Good.
One, yeah, it's working. Okay, so I want to talk about potential profitability. When I was preparing for this, I tried to actually answer it for myself because I'm actually interested in this. But before I dive deep into like what I'm going to talk to you, I'm actually going to introduce you to somebody. I'm going to introduce you to the Big Brother because it's just the eyes here, but I actually managed to take a picture of that person. Where is which one? Okay. Still working? Okay. Okay, so it's working. So this is the Big Brother, or maybe not, because nobody actually ever saw the Big Brother, right? So it really makes me think like what it actually is, right? Because it's all the data out there. We had a conversation about maybe we can't use all of them, maybe we can. So it's actually a bit of a puzzling, like what it actually really is. And so then I thought maybe a different picture would be better. And I was thinking about, so this is about the profitability, right? So what would the profitability actually mean? So I was trying to look for something. And insurance industry is really old. And we were sitting for at the same place for a very long time. And something started to change. So in the past, we were concerned mostly with the insurance cycle, so there were cats and other stuff, and it went just in the cycles. We were profitable, not, and so on. It's like probably most of you know it. Now there is something new, and it's the technology. But to be honest, I think the profitability is actually about neither of these. So it's neither fully about the cycle anymore, but it's neither about the technology only, right? So what is it about? And before I really look at it, I tried understanding about, okay, so profitability, that's what we get. So there are some costs associated on the other side. So it's maybe limiting of the costs. So I tried looking, okay, so we have this new world with all the data. So data probably costs something. But actually, people don't really care about that. So I've found a study where only 9% of people read terms and conditions in anything, pretty much. There were even studies where people were able to sign up that they donate their kids to somewhere within these terms and conditions, which just demonstrates we don't read it. It's also when we voted, I think there were just very few people who cared about privacy. I personally don't care too much about the data privacy. With the cookies, like everybody's just accepting website. It wasn't like that some time ago, but now you just get annoyed by hitting an accept button. And in reality, when I try to figure out how much the data costs, it's nothing. It doesn't cost anything, right? So your personal information is really for free. So the cost is not really going to be a real factor. I was then thinking about regulators and like all these big fines. Can they affect profitability? And I said I'd probably do more work on that, but then I realized, well, there is actually in general more work to be done because we have GDPRs, we had like gender directive in the past, which I don't think was really like a massive success. Like in our company, we've introduced a data commitment to be really protecting our customer data, but I think it just needs a bit more work to really see how it impacts the profitability. So I think neither data nor the really the cost of data nor the really regulation and everything is ready yet, sort of sorted out, and we would really know what it impacts. But what I do know is the customer expects a value. So it's about really finding what the customer values in a given situation, because that doesn't change. And I think you had a good example in the presentations where some sort of a value was found. And whether it's more than the loss in privacy or whether it's actually personalized insurance, doesn't matter. The value is more important. So I'm going to quickly talk about value and some examples that we can see around the world related to the new products and Big Brother and everything. And that's what I'm going to focus on. So something that I don't find really that worked and something that maybe works because it delivers the value. So that's what I find the most important. So this is how I try to picture a value in an insurance company. So we have a lot of claims, some expenses, mostly internal. Then we sell products, which is also a bit expensive. And there is a bit of capital we need. There is a bit of profit that we have. That's the important part that will make us profitable. This roughly represents like the loss ratios and expense ratios for most of the products, I'd say. There is a big part where we are influenced by the regulator, where we must insure some products. There is a good part of the reinsurance in here, which is sort of like, it's sort of somewhere else for an insurance company. So I was thinking like, okay, so where are we trying to add value within this new world of the Big Brother? And I identified these items. So we usually, if you look at most of the startups and fintech companies, we either try to avoid claims by having better models, or we try to avoid sort of introduce protection measures that the claims don't happen, because we change the behavior of people, we motivate them to run, for example, or something. But that works only for some claims. It doesn't work for everything. We also then try to modernize systems and everything and reduce the staff costs so that we can actually create a bit more value there and decrease the premium. We potentially also externalize some of the services via the apps and other things. We go to clouds and everything. And then we also impact the sales, right? So we have a massive shift in the distribution channels where we go more direct, more mobile and everything. But again, there is still a good traditional way of like how we are looking at it. So I was thinking like, yes, there are areas where this can work, but how many of them there are? So how we are approaching it. So yes, there is AI, and it's potentially working and not working somewhere. So this is an example. Come on. Yeah, this is an example of a Google AI where they wanted to do a product of like, we're going to help your photos to like really give you a full experience of where you were. Well, it didn't really work out. It's a famous problem with blending two pictures and Google thinking a person is a mountain. Also, Lemonade, they said we have a lot of AI and stuff. We just change it completely. So their loss ratio is decreasing. But to be honest, I think they're very far away from the market average still. And not forgetting about all the expense ratios that they had. So is it actually really working fast enough to close the gap? I don't know. Then we have a new profession within the whole industry, all these kids, new millennials playing around with data, just running around, trying to go for it. So it's all the data scientists and trying to add more value. But are they ready? Are we doing really the right thing? Is it just that you go and play around with the data? I don't think so, because we've been playing around with data for ages in insurance, and we're still not miraculously profitable in all circumstances. So what else is there? Well, we've tried some sort of things like the black boxes, which is also known as telematics. Well, does it work? I don't know. Do we like all have telematics in all markets? It's been around for some time. Maybe not yet, because it was just focusing on something very, very tiny. It was a new machine. People were not maybe ready 100% for it. So even though all of these things like AI, boxes, data scientists could work in other industries, insurance is a bit tricky. And I have a quiz for you. So, what or who really understands the value of a customer? So, they can cut on claims frequency by preventing accidents. They can manage repair costs better because they cut value on that. They do cross-selling easily because they have very enthusiastic customers. They use existing foundation of millions of data. Do you know who that could be? It's the Tesla insurance that is just being launched now. And I do find this as something that can work because they are thinking about the whole process. They are not focusing on an app, on a data scientist, or on a box or something. They do look at it holistically. So they do have, they have everything. They have a customer base. They are doing it through autonomous cars. They are preventing everything. And now they are naturally starting an insurance because it's just a natural evolution of what they've been doing. So they really understand the whole end-to-end propositions, and that's why I came to saying, yeah, they are a very good example of where we can maybe go within this new Big Brother world. And that made me think about what the profitability actually is, and I found that it's actually a smart way up. I am a climber, so this picture really reminds me of something that I relate to. It's really difficult to climb the ice because it's so unpredictable, it's so complex, you can't really see it, it's changing all over the time, and you need to really find the right moment, and you need to just think about everything. You need to be smart with the people, with the partner that you decide. You need to be smart about understanding of the whole environment, not just a single ice flake or something. You really need to be smart in like looking ahead, not just staying here, we're looking at 5 years or something. So that's what I want to end my presentation with. I think insurance is more than just a single item, but it's more about, it's a very complex business and we can succeed, but we do need to think about it. And I also want to thank to many people who are here because we're trying to not just analyze data, we're trying to understand the customers. We try to go beyond. So it's a question of how far beyond my task can I go in the insurance to make it really connected and really smart. Thank you. Yep.
Those two first questions. Briefly and then...
How can fintech help insurance companies to access new risk pools? Yeah, I mean, it's what does a fintech company has to offer in terms of data, in terms of new proposition, in terms of something that we don't know? It's sometimes tricky because insurance is so complex that usually the insurance professionals, I've studied for 5 years just to become a qualified actuary because it was so complex. So it's not that easy. So I think it's about partnering with, like, when insurance it's not about what risk pools. Risk pools are probably something insurance company needs to sort out. It's more about partnering in the areas where you are not good at, maybe distribution channels, maybe really understanding, like looking for what an insurance company needs in terms of, oh, this is the market and I'm not very good at, and maybe providing a value there. So really listen to each other and partner with each other rather than try to just go and overrule it completely. So partnership would be the answer to that question, even though it's not a risk pool. When you refer to AI, you seem to focus on machine learning, AI approach, things like advanced connectivity.
We're
Yeah, that's correct. But in general, I think it's you need to understand what you're finding in your models, and what are really the implications. It's not just about the model, because there is regulators, there is other things. It's not just about you have a model and it's there. You really need to fully understand the all the aspects. It doesn't fully answer the questions. We can pick it up, stop by over the lunch or whenever, if you feel like, if you want to have the question answered in more detail, and we can have a conversation. Or book a meeting with me on the app. I still have some free slots, so if you want. Thank you.